Rebecca Patterson, the fancy title, Writing Daily. Great work with Sebastian Mallaby, Senior Fellow at the Council on Foreign Relations. I don't care because it's Bloomberg Money. Wonderful to have you here.
Great to be here.
Long ago and far away at Bessemer Trust, I came in and I said, wonderful pontification to wealth management people. If you were at Bessemer Trust today, how do you handle this bond market?
You know, I would have been nervous about bonds for some time. I wrote an op-ed in the New York Times in January last year expressing some concern about longer-term bonds because the policies we were getting were going to increase the deficit, increase growth, which is a good thing, but push up inflation, therefore likely higher rates. So this isn't a surprise what's happening. I think the surprise this week is now we have volatility in those rates thanks to the Treasury. So I would prefer to be in cash or short-term fixed income and other types of diversifiers, dare I say it, gold.
Here's the canard of the business folks. Bring up the chart, please. This is for Rebecca Patterson. Wall Street and Rebecca Patterson talk differently than mere mortals. If you own the TLTs out 20 years plus, like a lot of retail does, picking up that yield, it's priced down. From COVID, it has been a crater of yield up, price down. In your world, what's long term? 7-year duration, not 20-year, when you're looking at retirement and wealth management?
Yeah, I think even shorter duration, like money markets right now. So the yield pickup you have by owning a longer term bond right now, yes, you get something for it, but is it worth the risk? And right now, I haven't thought it is. What I would say, though, is for retail investors, if you lose money when rates going up, it does depend on how fast the rates go up, and it depends what the yield is. So if I'm getting a high yield, say the 30-year, it's 5.24%, and yields continue higher but very slowly, I lose money as the prices fall and the yields go up, but I'm making money on that coupon. So it depends how quickly this move happens
They get the envelope at home. I'm sorry. They get the envelope at home and $100,000 has become $97,238. And then for your wealth management, the next month it's $95,800. Wall Street rationalizes. In the Bloomberg Money world, folks, you're looking at yield up, price down.
Right. So the rate of change is what you're saying you're focused on.
Correct.
When we look at the volatility in the bond market, and you can see it certainly this week.
Yes.
Does it feel like the U.S. bond market is increasingly looking like a developing market as opposed to a developed market?
A little bit, yes.
I mean, if I wanted this kind of volatility, I'd go and invest in another country's bonds, not the U.S.
Well, the irony today is that a number of emerging financial markets have done better than the U.S. market in stocks and bonds this year. And some of that is fundamentals and some of it is just point in time and what those economies are doing. If I'm Korea or Taiwan and I'm doing a lot of AI, that's obviously helped me. If I'm another country and I'm doing a lot of commodity exports, maybe that would have helped me. But I hear you. The point is that with our debt to GDP in the United States running around 100% and poised to go towards 120 over the next decade, and questions around who's buying the bonds and what yield they need to buy them, it makes things a little more tenuous.
You say we need to watch the U.S. dollar because it'll suffer if the U.S. Treasury under Scott Bessent can bring down yields. If you're an American living abroad, you certainly feel the effects of the dollar's strength and weaknesses, all the swings. And I feel affected if I'm traveling abroad, but not if I'm sitting here in New York for weeks on end.
Right. No.
Am I misunderstanding that?
100%. If you're an American, you live in dollars, you get paid in dollars, you spend dollars, the only way you're going to feel that exchange rate movement is what it does to inflation and what it does to financial conditions. And what I mean by that is when you have a weaker dollar, basically it tends to push up inflation in the U.S. And at the margin, that might make it more likely that the Federal Reserve thinks it needs to raise interest rates.
Do you predict a weaker dollar?
I'm more in kind of the range camp right now. So I don't think the dollar's about to fall off a cliff.
We just brought up the Gura Camp bill for this summer. Let's bring it up again. I was a mistake. It's Bloomberg Money correction here, folks. This is the U.S. debt clock popping out at $40 trillion. You and I were weaned on Paul Tsongas, Sam Nunn, Pete Peterson, and the rest.
These people
Every year, cry wolf, cry wolf, cry wolf. In my retirement, in my wealth management study, is it time to stop crying wolf?
I think there's two things that are different today. One is simply the size of the debt and the fact that Well, so that's one thing. The second thing is that neither the public nor the politicians are willing to turn the corner on fiscal policy. Americans since 2008 have been conditioned to think the government's going to come to their rescue anytime there's a problem. And politicians trying to hold on to their seats. Yep. Fiscal austerity doesn't get you reelected. And so it's just been this self-fulfilling thing where every government, both parties, keep increasing that deficit, which pushes up that debt clock. So something has to give. We need politicians to be honest with voters and say we need to have fiscal austerity, and we need voters to accept that to have a stronger financial market and economy, there is a price.
So when you say something has to give, what does that look like, and how will people feel it?
Well, if it is fiscal austerity, more spending cuts, which are harder to do, or tax hikes, and we'll see who pays those tax hikes. That's a question mark. If it's not that, and politically that's not likely anytime soon, then we have to get something else happening. And my fear, and I'm not calling for a crisis, but my fear is this happens in an ugly way that forces the austerity. And that could come from a few things. It could come here at home. Let's say there's a catalyst that pulls down sentiment towards artificial intelligence, AI stocks. It's not just an AI stock trade anymore. It's AI stocks, AI debt. Everything comes down.
The entire stock market, the entire corporate bond market.
And globally now, right? AI is in a lot of different markets. So that's one risk. I think a second risk is if inflation's sticky, the Fed has to raise rates higher than expected. Right. That could be another catalyst. And don't forget overseas. You might be spending and living in dollars, but if France has a debt crisis, we will have contagion here in the U.S.
I'm sorry, I didn't research this. The interns have all gone back to school. Are you on a task force? Are you on
one of the Fed task force? No, one of Warsh's 5 task forces.
Lucky you, you're not on. What would you do on a retirement task force right now? What would be goal one?
A retirement task force.
Social Security task force, Rebecca Patterson.
Social Security task force. We have to raise the age where you start getting benefits from Social Security. People live longer.
100% agree. We also, the rich people, have to put in more.
We could do some means testing. I don't mind contributing to Social Security. I shouldn't get any. I'll live fine without it. I would rather have my money going to help people who need it more, and therefore we don't have a financial crisis.
I'm not sure that's a popular opinion.
None of these are popular opinions, which is why it hasn't been addressed.
Since she's not doing popular opinions, does she come back or not?
Yes, we need to have her back.
Okay. I would like to come back. Please have me back.
All right, Rebecca Patterson from the Council on Foreign Relations. She will be sticking with us, but we're going to talk some more personal finance, get Rebecca's take on how she manages her personal finance. This is Bloomberg Money.
Bloomberg Money, a perfect Friday in New York City. Hope you have a wonderful weekend. Are you working all next week? Or I
am working all next week, but I have to work doubly hard because it feels like no one's in the office.
No one's in the office. I mean,
and the bond market keeps going crazy. So.
It used to be quiet. It's not quiet anymore. What's not going to be quiet is November. Rebecca Patterson with a book come November, Investment Wisdom for Our Friends and Loved Ones. We are the first people to talk about
I know.
this.
I feel like we're getting a sneak preview of all this. So, Rebecca, because of that, and you're going to come back once the book is published,
of course.
I want to get a sense of your personal investment approach. How do you do things? Are you kind of a set it and forget it person, or are you constantly making changes based on conditions?
I'm not a trader. And when I say that, I mean people who like to figure out what to buy and sell daily or even hourly. I'm an investor. So I'm saying, what are my retirement goals? What money do I need along the way for kids' weddings, down payments for homes, et cetera? And then figuring out my asset allocation. Partly because I've been living in this world for 30 years, I'm comfortable making some tactical tilts in my portfolio along the way, whether I'm leaning a little harder into equities or out or towards a certain country or a sector. But I'd say those are at the margin, because I think for most people, they get emotional.
Yeah.
They think they need to time it. Oh my gosh, the market's frothy. There's a bubble. I want to get out. It's really unusual that people can time getting out and then back in well.
So you have to time it twice.
You're better off just figure out what makes sense for you personally and then let it go.
Is there anything that's off limits to you when you look at all the possible investments out there?
I am agnostic about crypto. If other people want to trade it, God bless. It's not for me. I don't like that you can't determine a fair value. I don't like that there are so many idiosyncratic drivers around it. However, I will fully admit, if you bought it in 2012 and held it to today, you'd be extremely happy.
All right, Rebecca, such a pleasure to have you here.
Great to have you.
Thank you so much.
Thanks.
Rebecca Patterson, Senior Fellow at the Council on Foreign Relations, formerly with Bessemer Trust.